Making money in the cryptocurrency market can be both rewarding and risky. Here are several strategies you can consider, but keep in mind that cryptocurrency investments come with significant volatility and risk, so it's important to do your own research and consider your risk tolerance before getting started. Buy and hold, HODL. This strategy involves purchasing cryptocurrencies and holding them for the long term, with the hope that their value will increase over time. Many investors have made significant gains by holding on to cryptocurrencies like Bitcoin and Ethereum for several years. However, this strategy requires patience and the ability to withstand market fluctuations. Trading involves buying and selling cryptocurrencies on a short-term basis to profit from price fluctuations. There are different types of trading, including day trading, buying and selling within the same day, swing trading, holding for several days or weeks, and scalping, making quick, small trades. Successful trading requires technical analysis, chart reading skills, and a good understanding of market trends. Staking. Some cryptocurrencies offer the opportunity to earn passive income by staking them. Staking involves locking up your coins in a wallet to support the network's operations, and in return, you receive rewards in the form of additional coins. Staking can be a way to earn a steady stream of income if you believe in the long-term potential of the cryptocurrency. Mining involves validating and adding transactions to a blockchain by solving complex mathematical problems. Miners are rewarded with new cryptocurrency coins for their efforts. However, mining has become more competitive and resource-intensive over time, making it less accessible to the average person. Initial coin offerings, ECOs, and token sales. Investing in ECOs or token sales of new cryptocurrencies can be lucrative if you can identify promising projects early. However, it's essential to research these projects thoroughly, as many have turned out to be scams or failures. Dividend and yield-bearing tokens. Some cryptocurrencies offer dividends or yield-bearing tokens that pay out rewards to holders based on the amount they hold. These tokens often require you to lock up your assets for a specified period. Arbitrage involves taking advantage of price differences for the same cryptocurrency on different exchanges. You buy low on one exchange and sell high on another, profiting from the price differential. Keep in mind that arbitrage opportunities are often short-lived and require quick execution. Diversification. Spreading your investments across various cryptocurrencies can help mitigate risk. Avoid putting all your money into a single cryptocurrency, as the market is highly unpredictable.